Fiserve stock is down 70% in the past year, and the stock fell 44% in a single trading day because they reported horrible earnings. In this video, let's analyze if this is an overreaction by the market and if this has presented an opportunity to buy the company by looking at the fundamentals and running a DCF model to calculate the intrinsic value of the company and potential future returns. Fiserve has seen good revenue growth in the past 5 years, growing from $14 billion to $21 billion currently, which is a compounded annual growth rate of 8.4%. However, in their last earnings, they guided for 3.5% to 4% revenue growth this year. Regarding profit, their net income has also seen good growth in the past 5 years, growing from $958 million to $3.6 billion today. And they have even more free cash flow, currently sitting at $4.6 billion. And profit is going to continue to grow because they have great margins, with gross margin being at 60%, profit margin at 17%, and free cash flow margin at 21%. Another positive worth mentioning in their financials is the number of shares outstanding. They have been buying back a ton of shares recently as the stock got cheaper. This is very positive for investors because it means that you own a bigger portion of the company as you share the profits with less people. Then, in order to calculate the intrinsic value of the company, I use my Google Sheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $97 per share, middle $140 and high $195. And because the stock is currently trading at around $63 per share, this means that if my low assumptions occur, you would get an 18.7% annual return on your money, middle 26.4% and high 34%. Now, as far as my assumptions, I assume the company grows revenue between 4 and 8% over the next 7 years, the average of profit margin and free cash flow margin between 17 and 23%, and I assign the PM price to free cash flow at the end of the 7 years of 14, 16, and 18. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. This is obviously why I'm very interested in this stock and why investors have become interested as well, because it has become extremely cheap. Moreover, the company is now trading at a price to free cash flow of around 7, when before at 1 around 23. However, like every investment, there are risks, and the main risk of investing in this company is the balance sheet. They have $1 billion in cash and $30 billion in debt, which is a lot of debt for a company that has a market cap of $34 billion. So you have to be comfortable with this risk when investing in this company. Another risk is management, because the old CEO and CFO were guiding for very inflated numbers that they could not meet. They were not being very forthcoming with what was truly going on at their financial solutions segment. Now at Fiserve is pretty much an entirely new management team. New CEO who came in May, the new CFO is coming over from Global Payments, and they have a new co-president who's coming over from UNH. They shook up the board quite a bit. So this is a really completely new management team that has been put in place. Also, when a new management team comes in place, they tend to guide really low in order to beat expectations in the future, which is something to take into account as well. Lastly, as I said before, their last earnings were horrible, especially in the Argentina segment. In conclusion, although I believe margins have shrunk a bit and they have guided for less revenue growth, I believe this has been an overreaction by the market and we have a good opportunity to buy an established company at a huge discount. Lastly, if you want a discount on stockanalysis.com, grab my code in the description. I hope you found this video valuable. Let me know what you think about this company in the comments, and I'll see you in the next one.